Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Boy, what a day it's been. We had a USDA report earlier today, and the markets have moved considerably. So without me wasting your time, why don't we jump right in and see what these markets have done? How about corn? Slip sliding away is the song I would put this to. 12.5 cents lower in December at 520.5. The low was 522 after the report. So we've broken that and continue to do some work to the downside. So let's keep that in mind as we get closer to the close. How about soybeans? They were also having a difficult time, and they still are. 32 cents lower at 11.96 and a quarter in that NOVE contract, below $12. January holding on at $12, 33 cents lower at 12.06 and three quarters. Another weak market as well. Wheat was a different story today. We'll see if we can hang on to these gains. We've come off considerably. Last is 734 in that Chicago wheat. We did have a high of 743. So almost about 9 cents higher. So it's up 2 1/4 on the day. March is up 1 3/4 at 747 and a quarter. Let's see if we've got some strength in the hard red wheat in Kansas City. Mild would be the word I would say. 2 3/4 cents higher, and that D's contract at 737 and a quarter. While we've got March up at 745 and a half, up 2 3/4 cents. So wheat enjoying a little bit of a better day. Spring wheat. This is December contract at 953 even. That's up 7.5 cents. March is up 6.5 cents at 941 and a half. And then let's finish up here real quick by taking a quick peek. Ooh, boy, cotton is really adding to the losses here. Down 238, coming in at 107 in the D's contract, 107 spot 41. So kind of taking it on the chin there. Well, let's bring in our guest analyst, Ted Seifried from Zaner Ag Hedge. Maybe he can sort it all out for us on a day that we've had a USDA report. Ted, what are your thoughts?
You know what, Scott? It wasn't a shockingly bearish report. Although, if you look at the board, it kind of feels that way. But yeah, carryover came in a little bit higher than expected for corn. A 1.5 billion bushel carryover. The trade was looking for 14.4 or 1.44. So 60 million bushels. And then for beans, we were looking for 300 million bushel carryover. It came in at 320. Okay. I kind of wonder if this report not being shocking bullish, like they didn't raise soybean yield to like a 52.4, and we're not looking at a 420 million bushel carryover. I kind of wonder if this means that once we get this sort of technical flush out that we're seeing here today, if we're going to put in some harvest lows and start to bounce back. Keep in mind that last year on the same October report, the USDA was expecting a 290 million bushel carryover for soybeans and a 2.2 billion bushel carryover for corn. And then we saw a whole bunch of Chinese buying, and things got tighter. I wonder if the Chinese are going to be rather active buyers with beans under $12. I still think there's risk of the South American crop problem, or China's going to buy more than expected. I still think China's going to be a more aggressive buyer than expected. So I kind of think we're setting ourselves up for this sort of post-harvest rally now that we're more than 40% harvested in corn and beans. And I think once we find our footing here, we'll start to see a bit of a bounce going into the end of the calendar year.
All right, that's pretty good stuff. We're going to take that as a good spot to take a quick break. Come back and talk with Ted Seifried about livestock after these messages. And welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. This is the last time we're going to be getting together before the end of the show. A big report day today, mostly for the grains, obviously, but we'll see how the livestock reacted. Let's take a look at live cattle and that live cattle market, because those markets are your money. Kind of a quiet day today. December rolling over about 97 cents at 129.20, while we had February off 75 cents at 134 spot 12. How about feeders? We had corn down. Let's see if the feeders reacted. And if they didn't, that's not a good sign. And they really didn't. We've got NOVE still lower by 20 cents at 161.52. Jan is up 27 cents at 162 spot 37. And then lastly, let's go over to lean hogs. Lean hogs are down today. They've been down all day today. This is about the level they've been for a while now. Deese is off $1.95 at 78.22, while we've got Feb off $1.92 at 81.15. Let's bring back in Ted Seifried from Zaner Ag Hedge. Ted, I will say this, just to throw you off your game for a second. Boy, there's a lot of tweets and pictures of you with a beautiful muscle car doing the rounds on Twitter. I didn't know you were such an aficionado, but man, oh man. But anyway, I had to get that off my chest because it looked pretty good, if you ask me. What do you think about the livestock now?
Thank you. Yeah, it's hard to. Okay. You know, as you said, it's a little bit disappointing that feeder cattle aren't higher, or that the cattle complex as a whole aren't higher with corn being down as much as they are. But look at what's going on everywhere else too. We've got a bit of a risk off day going on across the board, and a lot of that's due to the strength that we're seeing in the dollar. So, you know, you got to kind of disassociate the micro and macro fundamentals, and this is more of a macro thing. So a little bit of pressure on the cattle. Again, I think we're just range bound for now. We've kind of defined this range between 130 and 140 in the fat cattle. So I think we're just kind of sideways here. The hog, though, disappointing. I mean, we are down pretty sharply. This is sort of a make or break day for the hog. I really think we need to come back here on the close, which is like right now. Otherwise, it really does kind of look like we're going to try to probe lower. And if we start breaking some of these key technical support points, man, it looks like we can go lower. Now, fundamentally speaking, I think, you know, the December hog contract should be trading upper 80s, lower 90s at some point. But at the moment, it's looking like it wants to go lower before it goes higher, if it goes higher.
You know, that's my concern. You know, if you look at everything in the aggregate, is when we've got these input prices going through the roof everywhere, right? And they're going to be more expensive for the guys putting stuff in the ground, you know, come the spring, or anybody that's got to feed anything. But at the same time, if we don't see the board kind of rally with it, I think Wall Street's expecting that, because I'm starting to see Wall Street money come back in for that quote unquote inflation trade. But I think that that could be a double whammy, Ted, if we see all these input prices spiking at the same time we're not getting what we'd like to see on the other end when it comes to prices on the board. That could be a bad double whammy. So I think we're going to have to wait and see. But that's probably what's keeping me awake at night, and probably some other producers, farmers, and ranchers as well. So I really appreciate everything you had to say today, especially those pictures of that wonderful car. Quickly for the audience, 0 to 60, how many seconds?
About 3.3. And listen, it's getting converted to run E85 ethanol. So all go right. Corn, go.
I gotta go. All right, man. Thanks. I'm going to throw this one back over to Tammy.